All right, good morning, Lagos. Good morning, everyone. This is Follow the Money brought to you by Nairametrics. My name is Ugo Dre, and we do this every Monday, 8 to 8:30. And of course, you can catch a recorded version of this show on Nairametrics channel on YouTube. Just go to Nairametrics TV, follow that channel. Of course, you can also catch previous episodes of Follow the Money. We're in around last week. Of course, it was a holiday now. Come on, we had to rest. And then we got into the week last week, and it was such a bizarre, crazy week. Donald Trump essentially turned that's the global economy, upside down with his decision to embark on a global tariff. Like, essentially, I think what he called it Liberation Day, and set the entire economy, global economy, on a collision course. Because he said that the America has been gamed or is being gamed, and for that reason, he decided to tariff the entire world, every country, including, yes, Nigeria. Nigeria is also getting a 14% tariff on all exports from Nigeria to the US. Of course, Nigeria exports 90% plus crude oil as one of our exports to the US, and another 10% or so made up of other things, particularly agriculture projects. So Nigeria also runs a trade surplus with the US, which means we export more to the US than we import from the US, and so that is why we are being slammed that tariff. And it's pretty interesting how Donald Trump came to arrive at that tariff number. It's been a lot of videos, a lot of commentary, a lot of articles written online expressing major concerns around how that tariff number, how he came about those tariffs, and that's probably what is reeling the entire the global markets. Just also add that China also reciprocated with its own tariff, and that also just got the markets feeling that, look, this might just turn out into a full-blown trade war and could cause economic recession. But I guess you're just wondering, how did Trump particularly exactly how did he come up with those tariff numbers? How did him and his team come up with those tariff numbers? Well, it all came down to a simple math, very simple math, and all he basically did was to check the surplus. I mean, if you're looking at it from a Nigerian perspective, so the surplus that Nigeria has against the US, which is our exports less our imports from the US, our exports to the US less our import from the US, divided by our export to the US. Let me repeat that math. So the surplus, which is our export to the US less our import to the US, divided by our export to the US. It's just simple math, So surplus, trade surplus, divided by our exports to the US, or trade deficit if you're on the US side, divided by imports from Nigeria to the US. And so that came to roughly 29, 30% or 28%, it all depends on how you're calculating it. And then of course you divide that by 2, because according to Trump, he was giving countries a 50% discount, really, and that's how we came to that 14% number. And that's basically how he ended up, sending tariffs for most countries around the world. So it really isn't about, maybe tariffs per se, like tariffs that you're charging on US goods, because we did hear that there's some countries who had less tariff against the US, but they still ended up getting being tariffed nonetheless, because of the so-called formula that the US has used. So in case you're wondering again, just to explain it, surplus divided by exports to the US. That's how we basically got the tariff. So there's been a lot of talk around that and what it probably means for Nigeria. I know this is Follow the Money. We talk about markets here, but I thought it was important that we get into this so that a lot of you who have been asking me can basically understand. I'm probably going to do a separate podcast on this later, but just for our radio listeners, those of you on your way to work in the morning and trying to figure out what this week is going to turn out to be, what this probably means for Nigeria. Well, it's a lot of challenges because, more importantly, we do export crude oil to the U.S. Agreed, we don't import that much from the U.S., but we do import cars from the U.S., particularly also aircraft, machinery, and some of those kind of goods we import from the US. So pretty much, if Nigeria is going to be reciprocating with the tariff, then import of those goods will probably be expensive. But worse still, because America is, we're in an intertwined world, people who export or who are involved in making these products or export these products to the US and then it gets repackaged and import and exported to Nigeria, you could see increase in prices in motor vehicles, particularly over the next few weeks and months. The tariff has already taken off for most countries, so I expect to see prices of some of those things go up. And then, of course, because the global market is reeling, the global market is basically in disarray, this could also affect funds flow, capital flows across like the world, which means you could get a lot less people, a lot less investors moving capital around the world. And this can just be a challenge, right? Because we do need capital, we do need foreign investments in Nigeria for us to continue to grow, or continue our reform process, and most importantly, keep the exchange rate pretty much stable. So that's a bit of a risk that we do face because of these tariffs. And of course, global markets are tanking, so we need to watch what that also means for Nigerian investment or for investment in the Nigerian capital markets. Because these things can be quite contagious as well. And then for a lot of Nigerians who have businesses abroad or who have families abroad, this could also mean higher cost of living because inflation is expected to rise if some of these policies are not rolled back or global leaders do not at some point reach a middle ground. And when inflation goes up, that affects everyone as well. So there's a whole lot of things that we're looking at that is giving us chills and giving us concern. Of course, there are opportunities as well because, I mean, with the global trade order being changed, what is Nigeria doing and how can Nigeria position itself so that it also becomes a beautiful bride and we can take advantage of, some of the fallouts of this global trade war that looks like we're getting into. So that is just preamble for Follow the Money today. I just thought it was important to put that out there for you. But watch out for my podcast later this week where I will, as much as possible, digest this on my Money Brief podcast. Of course, this program reflects my view and not that of Nairametrics. So if you're looking for financial advice here, we don't give that here. This show is purely for educational purposes. But if you're looking for financial advice around what to invest in or where to invest, of course, you can always consult your financial advisor. So what I do here is just break down stock market. I do occasionally reveal some of my stock picks, some of the things I want to be investing in. But even at that, you have to have exclusive access to it. And you can check that on followthemoney.ng, ftm.ng, ftm.ng. You want to check that out. That site is launching pretty soon, and you're going to be seeing some of my own, stock picks and some other important content or articles that I'm going to be putting out, essentially dissecting Nigerian investment space. All right, so we'll move into last week. So last week was another negative week for the stock market. The all-share index closed slightly lower, dipping by 0.14% to finish at 105,511, down from 105,660 as well. So market capitalization fell slightly to 66.1 trillion naira. So we're still slightly above that 66 trillion naira line. Market activity slowed significantly as trading volumes dropped by a staggering 61% from 3 billion shares last week. That's the week before, to just 3.1 billion shares this week. So fewer equities gained, with only 23 appreciating in price, while we saw 51 stocks lose ground. So a pretty difficult week for stocks, even though we had a lot of results come out last week and results that we all think were pretty good. So why are investors reacting this way? I mean, this Nigerian stock market can just force someone's hand shot. Anyway, the banking index or the banking stocks was a bit of a bright spot, gaining just 0.22%, and that was supported by gains from the likes of Fidelity Bank, Zenith, GTCO, and Access. Fidelity, Zenith, and GTCO dropped blistering results the week before last week as well. Their numbers were very good. I'm going to be talking about banking stocks in the next Follow the Money show when we have most of the banking stocks bank results out. There's still few holdouts there. Access is yet to release, and First Holdco is also yet to release. So once those numbers drop, we're going to look at the entire banking sector space and see how well they performed. Insurance stocks plunged for 4%, dragged down by drops from Suno Assurance, which has been one of the better performers for this year, Universal Insurance as well, and Consolidated Hallmark all declined. And of course, oil and gas stocks also declined by 1%, despite some solid results from Total and Aradel. I'm going to talk about Total on this show as well, but that was not enough to keep the oil and gas index sustained, as they did fall as well. Owando fell 13%, so probably one of the reasons why the entire index dragged below. Consumer goods and industrial index also closed lower, so pretty tough for your portfolio last week, I will assume. And so, what were the major losers last week? Well, PZ, Cousins, University Press, Omatech, all were part of the major losers during the week, and we also had Suno Insurance, like I mentioned, Universal Insurance, Owando, and Tantalizers also making up the top losers chart, and of course UACN, which was one of the best performing stocks in terms of results published. I think if time permits, I probably will go into UACN as well today, but for some reason the share price was down 18% during the week as well. So leading, the gainers, the losers chart. And of course, on the gainer side, we had the NGX, that's the Nigerian Exchange Group. Of course, they are also listed. It was on the gainers chart. Dark Communications on the gainers chart. UPDC Right on the gainers chart. Transcorp Hotels and Fitzin Healthcare also make up the gainers chart. But in terms of specific numbers, Africa Potentials continue to gain with 70% gain, and of course Union Die Consult up 19.59%, and then VFD Group led the gainers chart last week with a whopping 20.76% to be specific gain, and their results were also out. The audited account was also out last week, and it was pretty much a solid number for that investment group. So that basically was how stocks performed during the week. Of course, what are we expecting? Well, we have to very much focus on what happens to the market today. Futures, that's global futures, suggested that we're probably going to see another downward trend today. Friday and Thursday was one of the worst stock market routes that we've seen, particularly in the US, since COVID-19 struck in 2020. So the fear is that markets are going to continue to fall today, and if we don't take time, this could basically lead to another global recession, which we hope that our world leaders can avoid. And like I said, this thing is contagious, and we don't want it spilling here into Nigeria, because we're basically a fragile economy and we're just basically growing. And hey, guess what? Crude oil prices also fell to about $65, and you know what crude oil prices mean to Nigeria. So that is why this is a huge challenge for us, and it's also going to be interesting to see how our stock market reacts this morning when they do open to a lot of the challenges we're seeing. Well, on a lighter note, there was a billionaire list published by Forbes. And of course, well, I really don't know whether it concerns it, but hey, look, there were 4 Nigerian billionaires mentioned on the billionaire list, according to Forbes. Aliko Dangote remains the richest man in Africa. He's been on that list for like the last 14 years or thereabout as number 1, richest man in Africa. And of course, he was also followed by Mike Adenuga was also on that list. Abdul Samad Rabiu of the BUA group was also on that list, and of course Femi Otedola also makes up the 4th person. So these are the 4 richest people in Nigeria, according to Forbes, in dollars. Of course, you have a lot of rich people in Naira, but these are the richest in dollars. Doesn't mean that there are no other rich people, but based on how Forbes calculates its own rich list. These are the four richest people in Nigeria, and they make up, I think top 20 rich people in Africa. All right, so we're going to be back in a bit, and when we're back, we're going to run through some of the results that came out last week in focus, and yeah, be right back in a bit. All right, welcome back. This is Follow the Money, brought to you by Nairametrics. My name is Ugodre, and we do this every Monday, 8 to 8:30. If you're just joining, if you missed any part of the show, don't worry. You can always go back to, just go to our podcast channel or our YouTube channel, Nairametrics TV, and you would even see me live on the studio as I basically present this show. All right, so a lot of results were out during the week, and I'm just going to run through some of them and give you a little bit of my take on this result. So Cadbury released its 2024 audited accounts. Wait a minute though. I mean, I know that we've been on this road before, because people are like, didn't you guys talk about the results a few weeks ago? Well, yeah, but that wasn't the audited account. So what tends to happen is that companies release unaudited numbers because we just can't wait for the audited accounts. That's how markets work. So investors just want to see, let's even have an idea of what your unaudited numbers are like, because most times it's not so much different from the audited financials. So that's why a lot of companies are releasing results again, and it looks as if they are doing it all over again. No, this is the audited account itself. And so Cadbury released its audited numbers for 2024, and they did declare a pre-tax loss of 28.3 billion for the year. Huge number, but hey, it's still better than the 32 billion loss that they posted in 2023. So whether you like it or not, it's a 12 or so percent reduction, that they had. But we do know that the road to profitability is still long for Cadbury. Cadbury, just like most FMCG companies, particularly multinationals, all face the same problem over the last 2 years because of Forex. But on the revenue side, things look a lot better. Full year revenue jumped 60.7% to 129 billion for that company, driven largely by its refreshment and beverage line. So it looks like a lot of you love their refreshment and beverage products. Domestic sales was also a major contributing factor to Cadbury's revenues, contributing 114 billion, or roughly 89% of its revenue. But the problem remains cost. FMCGs are facing a lot of cost pressures, and that is exactly what Cadbury faced as well. Cost of sales spiked 76% to 110 billion, driven mostly by higher expenses, higher raw material expenses, packaging, and of course finished goods. Left the company with a gross profit of 18.2 billion. And so when you have that sort of high cost of sales, then leaves you with very little margin for you to deal with other things like your operating expenses. And so one of the reasons why the company also incurred that kind of loss. Of course, they still face significant FS challenges because FX cost alone was about 34 point finance cost alone was about 34 or so billion. Nevertheless, Cadbury share price closed at 23.55 when it did release its results, giving you a year-to-date return of 9.5%. So bottom line here is that Cadbury seems to be clawing itself back into profitability. Still a long way up, but good that at least we're seeing its revenue go up, mostly due to price adjustments and volume push. Interesting to see what their Q1 numbers was going to be like when they do release it in a few days from now, so that we can see where that progress is being made. All right, so we move into oil and gas space, where fuel profits and dividend make good sense, and so that is TotalEnergies. So TotalEnergies releases numbers, one of the better performers of the last few years, and the company reported a pre-tax profit of 42.2 billion, more than double, in fact 140% better than the 17.5 billion naira it did. I almost said dollars there. I just wanted to say dollars by all means, God, but anyway, it was naira, 70.5 billion naira in 2023. This was powered mostly by huge jump in revenue. The company, for the first time, hit 1 trillion naira in revenue. I don't know how this downstream company is doing it. Total is just a downstream operating company. So, but BUA controls a huge market share, 1 trillion for the year compared to 634 billion the year before. If you're wondering why the margins are still so thin, hey, downstream oil and gas margins are usually very, very thin. So even with a 1 trillion naira revenue, they're only able to keep 42 billion in profit. That's just crazy. But downstream sector always operates on a very low margin. But what are the major drivers of revenue for the company? White products, which is fuel, contributed 830 billion. Of course, that includes fuel, diesel, and and jet fuel. That makes up white products. And then 214 billion came from its lubricants division. And of course, cost of sale also went up to by about 67% to 926 billion. And of course, income also rose as well. Income, in fact, I think Total's major profit came from other income, which contributed 30.8 billion naira to his bottom line. And from what we gather, it's due to a massive 20 billion naira write back of accruals. So it looks like it's debtors or it's trade debtors that they've basically written off, now paid them 25 billion. I suspect that could be tied to subsidy. So 25 billion, that really helped the company's numbers to sort of stabilize. And so we move quickly to ETranzact. By the way, Total has always been one of those stocks that I always have in my portfolio or my watch list. Always delivering solid numbers year in, year out. Of course, ETranzact, one of the few tech companies that will have listed on the exchange, they did release their numbers as well for the year ended December 2024 and reported a pre-tax profit of 4.8 billion naira, up 53.2% year on year. Even though they did shockingly report a 12% revenue drop to 29.8 billion. That revenue dip mostly due to sharp drop in mobile airtime sales. Yeah, so ETranzact, as much as a tech company, most of its money is made from airtime sales. So they're one of the major, sub sellers of airtime from the likes of MTN and Airtel and Globalcom and Nine Mobile. And that's basically where they make their money from, but most of their money from. And so that number did drop compared to 24 billion in 2023 or to 26 billion compared from 24.8 billion in 2023 to 16.8 billion in 2024. So that is a massive hit there. But nevertheless, they were still able to maintain sizable profits or higher profits during the year as the business became leaner and more efficient, cost-wise. So ETranzact interest income was also up 158% thanks to better yields on deposits, and foreign exchange gains also helped lift the company up. So as much as it had struggles from top line, there were other areas where the company still made some money. Now, what's pretty interesting is that as much as the economy was very hard or very bad for a lot of companies last year, what we've seen generally across board is better performances from non-FMCG multinationals. A lot of Nigerian companies seem to have made money last year, mostly by increasing prices and pushing a little bit more volumes and trying to rein in on costs. And that's what we see generally. And that takes us to Unilever. Unilever is another multinational. They also did release their numbers, and revenue was up 44%. And you can see how much revenue has been going, year in, year out for most of these companies in 2024. So revenues was up 44% to hit 149.5 billion, with domestic sales making up a huge portion of its revenue, which is domestic sales, of course, is what it sells here in Nigeria. So what is the biggest revenue numbers or drivers for the company? Nutrition like seasoning cubes and food mixes helped the company attract 92 billion, followed by its personal care division with 43.9 billion. Now, despite higher gross profits of 55 billion, up nearly 60%, operating profit actually dipped 9.4% to 18.3 billion. Unilever was able to manage things and keep things afloat thanks mostly to its finance income, which also grew 46% to 6.8 billion. So at the end of the day, Unilever did eke out a pre-tax profit of 22.6 billion, just slightly higher or 3.5% higher than what it did the year before. So they managed to make that work. In terms of cash, a very cash rich company, has about 68 billion of cash in its balance sheet, and also has retained earnings of about 25.4 billion. So appears Unilever has been able to, go past some of the challenges they had over a few years ago because of FX, and seems like it's on course for growth in the coming years. Now, Ikeja Hotels also released its numbers. They are the owners of Sheraton Hotel, and pre-tax profits surged 125% to 8.5 billion during the year. You know that Sheraton Hotel that you see on Bank Anthony Way in Ikeja? Yeah, that's this. They're also listed, and the company that owns them is Ikeja Hotels. Net profits jumped to 7.2 billion, more than double, in fact twice the number, 247%. Revenue for that hotel was about 18.7 billion naira during the year, and most of it came from his hotel division. The hotel division contributes most of its revenue. In fact, room sales, out of that 18.7 billion, room sales was about 12 billion, or 65% of its revenue, and then food and beverage and others added the rest to revenue. So solid numbers there for Ikeja Hotel. And we'll quickly go to BUA Food. BUA Food also releases numbers. They did post a breakout result. Their flour mills division contributed 541 billion naira to its revenue. So BUA Foods also crossed a trillion. Of course, I think 1.5 trillion or so in revenues, and becoming one of the top revenue earners in that space during the year. And largely across sugar, the sugar division gave 743 billion. Pasta also contributed 197 billion to its revenues. And so one of the better performers, of course, during the year is BUA Food, and basically dominating the FMCG space on the NGX. All right, so that is Follow the Money for the week. It's been a very busy week, like I said. So next week, watch out. I'm going to be going through some of the banking stocks and their numbers. I'm going to be comparing and see who did well and who needs to improve, or who did a whole lot better. Of course, you can catch previous editions of the show on Follow the Money podcast on our YouTube channel, Nairametrics TV. Just go there and you see a whole lot of other interesting programs, of course, that you can watch. This has been Follow the Money, brought to you by Nairametrics. Do have a profitable week ahead. Goodbye.